Warren Buffett's Apple sell-off. What investors need to know. Welcome back to our channel, where we dive deep into the world of investing and finance. Today, we're dissecting Warren Buffett's recent move to sell nearly $2 billion worth of Apple shares. But before we jump into the analysis, if you're new here, don't forget to hit the subscribe button and the bell icon to stay updated with our latest content. The Buffett-Apple Conundrum. Last year, Warren Buffett made headlines by trimming Berkshire Hathaway's position in Apple, despite calling it a better business than any we own. But why the sell-off? Let's unravel the mystery. Buffett's decision wasn't solely about losing faith in Apple. In fact, it was part of a larger strategy involving tax optimization and portfolio balancing. Throughout 2023, Berkshire sold a staggering $32.8 billion worth of stocks while buying just $9.1 billion. This move wasn't driven solely by market sentiment, but also by tax considerations. Berkshire's balance sheet shows a whopping $85 billion in deferred tax liability, a figure that Buffett aims to mitigate by realizing gains and offsetting losses. The art of portfolio management. Buffett's stock sales weren't limited to Apple. He also slashed positions in companies like HP and Paramount Global, admitting defeat when investments didn't pan out as expected. However, it's crucial to understand that selling doesn't equate to abandonment. Buffett remains pragmatic, willing to correct mistakes and capitalize on opportunities. As Buffett famously said, "It's only when the tide goes out that you learn who's been swimming naked." His willingness to acknowledge missteps sets a valuable example for investors. Lessons learned and future prospects. So, did Buffett make a mistake selling Apple? History suggests he's no stranger to second-guessing his decisions, having previously admitted regrets over similar moves. Despite potential missed gains, Buffett's recent sell-off represents just a fraction of Berkshire's total Apple holdings, leaving room for future adjustments. From a valuation perspective, Apple remains an attractive investment, trading at reasonable multiples compared to its earnings and cash flow generation. Key takeaways for investors. What can investors learn from Buffett's Apple saga? Firstly, the importance of understanding the broader context behind stock sales, which often extend beyond mere sentiment. Secondly, the significance of humility in investing. Even legendary investors like Buffett aren't immune to mistakes, underscoring the importance of continuous learning and adaptation. Conclusion. And that wraps up our deep dive into Warren Buffett's Apple sell-off. Remember, investing isn't just about picking winners. It's about managing a portfolio with foresight and flexibility. If you found this video insightful, don't forget to give it a thumbs up and share it with fellow investors. Until next time, happy investing. Have a nice day.